Liz Young of SoFi analyzes the market dynamics. Now, despite concerns over potential overvaluation, she identifies promising opportunities in mega cap tech stocks, paralleling them with essential consumer staples. Liz contrasts the strong performance of mega cap tech with the recent struggles of high growth tech stocks, pointing to a market rotation as investors adjust their portfolios for the new year. However, ultimately, Liz conveys a bullish sentiment towards software investments over semiconductors as they look towards 2025.
Look at the last 6 months in the S&P 500. They've actually, this Magnificent Seven has actually lagged the S&P 500. So you're seeing a broadening going on within the markets, which means for us it takes a little bit of risk out of the market and gives us more and more opportunity. And I think they're great other places to be investing as you trim some of your large cap, your mega cap tech names.
Liz, you've really had a tale of two tech groups. I mean, the meltdown, as we've been calling it, in momentum, which has encapsulated a lot of, of other high growth tech names, AppLovin, for example, these stocks that yesterday really rolled over hard. So you got to be careful in the way you talk about tech as a sector. Mega cap seems to be performing better. These things now, after a massive run, some of these stocks are up 900%,
right,
or the like year to date. Had a really tough day yesterday, and some are down again today.
Yeah, I mean, some of them, you look at the chart, even a one-year chart, and try to convince yourself to buy after you see the line go from the bottom left to the upper right so strongly, it gets difficult. I'm going to steal a talking point from Mr. Belsky before he even gets to talk today. Some of these mega cap names are what people consider the new consumer staples, and that's something that I think people have looked to in periods like this. The month of December, month to date, we've seen this pretty big reversal in just factors, right? Momentum is performing poorly compared to how it had done earlier in the year.
Well, I mean, it was doing great until yesterday. And then all of a sudden you had a rollover. Like I said, the Palantirs of the world, the AppLovin isn't down another 6% today. It was down huge yesterday. It feels like something's going on with those stocks.
And I think that there's a rotation of those factors. So it's not just momentum that's seeing it. Low volatility stocks not doing well in December compared to how they've done earlier in the year. And then you look at the other end of the spectrum and you've got things like growth and liquidity doing really well, and they didn't do so well for the first part of the year. So I think there's a rotation happening partly because we're at the end of the year. People are taking some profits. They're trying to reallocate their portfolios, getting ready for the new year. And because we had this big burst of optimism and this big burst of buying post-election that probably needed to cool off a little bit. So the beneficiaries of that are perhaps taking it on the chin a little. The other thing I would say, especially about tech, is it's not all going to be equal going into the new year. I think we'll have a similar story to what we had in 2024, where some of them are going to look great, some of them are going to look not so great, and you have to be choosy about it. I'm choosing to break up the universe into semiconductors versus software, and I'm much more bullish on software in 25.